Assalamualaikum warahmatullahi wabarakatuh. Hello, happy Tuesday, and welcome everyone to AFTECH webinar series on the topic, A Greater Horizon for Indonesia Companies in Hong Kong, Capital, and Beyond. This webinar is a collaboration between the Indonesian Fintech Association, the Hong Kong Economic and Trade Office, Invest Hong Kong, and Hong Kong Exchanges and Clearing Limited. I'm your host, Maisha Daring. First, I would like to welcome our speakers and panelists here today. We are very grateful to be joined by Ms. Mercy Simorangkir, Managing Director of Indonesia Fintech Association, Mr. Kin-wai LAW, Director General of Hong Kong Economic and Trade Office, Ms. Winnie Han, Senior Vice President, Global Issuer Services of Hong Kong Stock Exchange, Mr. King Leung, Head of Fintech of Invest Hong Kong, Mr. Diki Wijaya, Chief Information Officer of Industry and our board member, Ms. Hannah Cassidy, partner, Hong Kong, co-chair of Global Bank Sector Group of Herbert Smith Freehills, and finally, Mr. Hilwan Brahmanda, Jakarta Office Head of Investment Promotion of Invest Hong Kong as our moderator today. Before the webinar session begins, please allow me to read out the agenda for today. Ariani, please. So soon we will be having an opening remarks by Ms. Mercy Simorangkir, Managing Director of AFTECH, followed by opening remarks by Mr. Kin-wai LAW, Director General of Hong Kong Economic and Trade Office. After that, we will be hearing Ms. Winnie Han's presentation on the overview of Hong Kong IPO market and strategic benefits for ASEAN or Indonesian new economic and tech issuers listing in Hong Kong, followed by Mr. King Leung presentation on overview of Hong Kong's fintech ecosystem, competitive advantage of setting up in Hong Kong from practical views. After that, we will be having a 30 minutes panel discussion with panelists from Ms. Winnie Han, Mr. King Leung, Mr. Diki Wijaya, and Ms. Hannah Cassidy. Followed by a 10-minute questions and answer session will be moderated by Mr. Hilwan Brahmanda before we are closing the webinar. Thank you, Riani. Now, I would like to invite Ms. Mercy Simorangkir, Managing Director of Indonesia Fintech Association, to give her opening speech. Before joining AFTECH as Managing Director, Mercy worked as New South Wales Trade and Investment Director based at the Australian Trade and Investment Commission, or Austrade. She has also experience of working at ASEAN Secretariat under ADB projects, as well as ERIA and Eurocham. Over the course of her professional career, she has built strong network with local industry, international business in Indonesia, as well as government agencies, international organizations, and academics. Mercy, the floor is yours.
Thank you, Maisha. Good afternoon, everyone. Thank you for joining this webinar, AFTECH, the Indonesia Fintech Association. Is with Invest webinar today. This is part of our effort to continuously build the ecosystem of fintech in Indonesia. This afternoon, I would like to briefly introduce everyone who has not been acquainted with our association so far. We established in 2016 with only 6 founding members. And as fintech continues to grow in Indonesia, we have grown into 310 startup members and also more than 20 financial institution members and also technology partners as part of our community. We strongly advocate for financial inclusion in Indonesia, and we've seen great potential for fintech to boost further the economy through creation of further financial inclusion and therefore economic inclusion. We are focusing on building our society through our roles as a lobbying body. We are also an SRO, self-regulatory organization for the digital finance innovation appointed by Financial Services Authority of Indonesia. We are also working with various stakeholders to build the community through collaboration on research and other community building activities. Right now with COVID-19, we notice that many of our players are facing a challenging time, and we'd like to explore or provide information that can help them expand their financing or expansion of their business out there. And we thought this will be a great opportunity to introduce the opportunity to them. So without further ado, thank you very much. We welcome the cooperation and we wish you a very successful discussion. Thank you.
Thank you, Mercy, for your speech. Next, I would like to invite Mr. Kin-wai LAW, Director General of Hong Kong Economic and Trade Office, to share with us his opening remarks. Mr. LAW joined the Hong Kong Civil Service in 2001 in the then Transport Branch. He has also served in the Development Bureau. Mr. LAW assumed his office in the Hong Kong Economic and Trade Office in Jakarta in December 2018. Before that, he had served in the Hong Kong Economic and Trade Office in Washington, D.C. and Singapore. The Director General at the Jakarta office is the most senior representative of the Hong Kong Special Administrative Region Government, or HKEX to the ASEAN. Mr. Law, the floor is yours.
Right. Thank you very much. Good afternoon, ladies and gentlemen. I'm very glad to see you all here in this virtual manner. And let me first thank AFTECH, HKEX, and Invest Hong Kong for co-organizing this event. Our office, the Hong Kong Economic and Trade Office, is very glad to have the opportunity to work with all of them. And I'm also very grateful to all the distinguished speakers for their presence and participation. Over the past few years, we were already experiencing something like a sea change in business environment and entrepreneurial mindset. The advancement of technology and the increasing interconnectedness among economies and localities have been pretty much pushing us in that direction. And the unfortunate event of pandemic is accelerating the pace one should take. And when we are seeing adversity and uncertainty, it's very possible and very likely that we are also seeing chances of opportunities. And in this regard, so Hong Kong continues to further enhance our overall strengths, sharpening our role as a hub for financial services, trade, capital, logistics, business, as well as talents, not only for Hong Kong, but also for ASEAN, for the greater region, which is very close to us. And in so doing, we are thinking about not only Hong Kong, but also our close neighbors and economic partners. And the fast growing ASEAN is definitely one of the very obvious candidates. The region is our second largest trading partner, which accounted for over 12% of our total trade in 2019. And Indonesia, the largest economy in the region, is as relevant as one could imagine. So we have close bilateral relations. We have an investment promotion and protection agreement as an example. We have also a comprehensive agreement on the avoidance of double taxation. And one of the most recent developments is the ASEAN-Hong Kong Free Trade Agreement. So we do have very good foundations for further cooperation and further engagement. And on today's theme, there are indeed lots of areas of synergy between Hong Kong and Indonesia. So on the Hong Kong side, our city is the global leading IPO center in 7 of the last 11 years. And we are also the second global biotech fundraising center. And we are among one of the world's top 10 Fintech hubs. And we ranked as the 4th most innovative economy in Asia in 2019. And currently, there are at least 8 unicorns in Hong Kong. And the Fintech companies in Hong Kong raised a total of more than $1 billion from 2014 to 2018. And at the same time, Indonesia is actually a confluence of digitalization with financial awareness. And we all see the tremendous boom in the technology arena including Fintech. And the digital economy of the country is poised to become the largest in Southeast Asia. And we're also seeing that technology companies in the country are on the rise, and there is also quite a number of unicorns here in Indonesia as well. So I'm very glad to have our distinguished speaker share the experience and insight with us. And before I close, just let me take this opportunity to provide you with an account of the national security law, the development related to which some of you may be following. So the law came into effect on 30th June 2020, and it is an important step to fully implement the basic law. It will not undermine the one country, two systems principles. Instead, it will strengthen its implementation. And Hong Kong continues to enjoy a high degree of autonomy as enshrined under the basic law. So the national security law only targets an extremely small minority of offenders of 4 very specific types of acts. And all the legitimate rights and freedoms currently enjoyed by people in Hong Kong, residents and overseas visitors and investors, businessmen alike, will continue to be protected in accordance with the basic law and the laws of Hong Kong. And we all know that a safe and stable society is very favorable to business and investment, and is indeed a prerequisite for an international financial and business center. So with the, and safeguarding national security and the rule of law are indeed the cornerstone to maintain the long-term safety and stability of Hong Kong. So with the national security law and all the solid fundamentals that we have in Hong Kong, I'm quite sure that our city will continue to be a location of choice for companies, investors, talents, capital, and ideas. So with these, let me just wish every success for today's webinar. And I do look forward to further exchanging views with all of you. Thank you very much.
Thank you very much, Mr. Kin-wai LAW, for your opening remarks. Now, without further ado, I will hand it straight over to Mr. Hilwan Brahmanda as our moderator for our webinar session today.
Thank you, Maisa. So good afternoon, everyone. Thank you for being here this afternoon. So I'm really pleased to having our 2 esteemed speakers this afternoon. So we have Winnie Han from Hong Kong Exchange and Clearing Limited, or HKEX, and King Long, my friend from Invest Hong Kong. So our first speaker, Winnie Han, is the Senior Vice President of Hong Kong Exchange and Clearing Limited. She's responsible on market development and charging in promotions and educating of HKEX IPO platforms to overseas founders and investors. And our second speaker is King Long, is the head of Fintech of Invest Hong Kong. So Invest Hong Kong is a governmental department who's in charge of attracting and retaining foreign investment in Hong Kong. So our first speaker, Winnie Han, she will share about overview of Hong Kong IPO market and strategic benefits for Indonesians, new economies, and tech companies who are planning to list in Hong Kong. Winnie, time is yours.
Thank you, Helen. Hello, everyone. It's my pleasure to do this online webinar with you and to share the overview of Hong Kong listing to you. So, up here on the first page, there are 3 parts in my presentation today. So first, I will try to tell you what is HKEX. So actually, Hong Kong Stock Exchange is a global market leader in the Asian time zone. So our goal is to connect China and also connect the world through various channels. So here you can see from the photo that our strategy is to be China anchored and globally connected with the technology empowered this process. So our goal is to link the investors from the global market to buy and access China liquidity, the China assets, and also try to link the China assets with the global liquidity. So we are working as a bridge and a hub to all of the investors and assets in the world. So how have we do in the past years? Actually, Hong Kong Exchange has ranked #1 for the 7th time in the past 11 years. And for last year, we have got a record-breaking year in terms of both number of new IPOs and the number of funds raised. And among all the funds we raised, we can see that 49% of the IPO funds came from listing of new economy issuers. And not only do we have Chinese issuers, we also welcome the many international issuers, which can be seen like about 60% of the IPO fund raised actually from the international listed companies. And also, we are proud to become the 2nd largest biotech fundraising center in the world, with 12% of our last year's IPO fundraised from biotech and healthcare sectors. So you can see from the bar chart that we raised $40 billion last year and ranked #1 globally. So how have we done in this year? Although the pandemic situation complicated the capital market, but we still hold our position as a global IPO fundraising center. So as up to now, you can see Hong Kong ranked #3 in terms of IPO fund raised, and we also listed the top 10 IPOs year to date to show you how diverse our issuers are. So you can see like we have welcomed JD and NetEase, which are both the tech giants in China, to come back do the secondary listing in Hong Kong. And also we have welcomed many healthcare issuers to list under this COVID-19 situation. And also you can see we have traditional issuers like real estate, and also consumer is very popular here as well. And how are these IPOs doing in Hong Kong? You can see from the IPO subscription rate. So they are all like above 100, and so they are all very welcome by investors. So we can see that despite of the COVID-19 situation, the Hong Kong IPO market is still very active and robust, and we have shown the resilience under this very challenging time. So why are this many issuers come to Hong Kong for listing? That's because we have very diverse global investor base. So these 2 bar charts shows you what the investors compositions are. So the left one you can see we have over 40% of issuers that are international investors. And among the 40 international investors, if you look at them from the regional perspective, they're very diverse. That we have about 20% US investors, and also 23 investors from UK, and about 13 from Europe. And as for mainland China, it accounts for 20+%. And also for the rest of the Asia Pacific Asian region, you can see Australia, Singapore, Japan, Taiwan, and other regions in Asia investors also actively trade in Hong Kong. So which makes Hong Kong a very truly international and diverse investor like paradise for them to invest with the Asian assets. And what are the push and pull momentum in Hong Kong? Actually, we have attracted many international issuers since the beginning of last decade. With the influx of international companies came to list in Hong Kong, beginning at 2010. Well, we welcomed the launch of Stock Connect program in 2014. Then we have changed our listing routes 2 years ago to welcome pre-revenue biotech companies as well as dual-class share new economy companies to list in Hong Kong. And we also, which can be also seen by the listing of Xiaomi and Meituan. And last year we have listed Budweiser, which is a global famous beer company, and also the 2nd largest IPO last year in Hong Kong. And with the development of our 19C chapter. We also welcome Alibaba Group to get back do the secondary listing in Hong Kong last year, as well as the recent listing of NetEase and JD in June, which marked also JD marks the largest IPO in Hong Kong this year. So this is a very clear roadmap for how this international and new economy issuers are coming to Hong Kong. And also, I think for issuers globalize, you are more concerned with how the international corporations will choose Hong Kong. So this is a map to show how these international names have chosen to come to Hong Kong, because Hong Kong's unique position in the world to bridge East and West countries. And also we attract these listings of international corporations of all sorts of sectors, which you can see that both including consumers and financials, and also new economy issuers, as well as like energies and insurance. So what have we done in 2018? Actually, we have introduced 3 new chapters to welcome first pre-revenue biotech companies to list in Hong Kong, and second, to attract innovative and high-growth companies with due class shares to help to list in Hong Kong, and also to attract innovative high-growth companies listed already in overseas exchanges to come list in Hong Kong. And what about the achievements? So actually, as I mentioned, we ranked #1 in both IPO fundraise and number of IPOs globally in 2018 and 2019. And in the biotech front, we have become the APEC largest and the world's 2nd largest IPO center for biotech companies. And we have already listed over 30 healthcare and biotech companies, and among which 18 issuers are under Chapter 18, which are pre-revenue companies, and raised over 85 billion Hong Kong dollars. So in total, we have already got 86 new economy and biotech companies listed under the new regime. This is a brief fact sheet on how this new economy issuers look like in Hong Kong's market. So as I mentioned, the number of the new economy issuers 84, and also together these issuers reached about 55 of the main boards size. And also in terms of market cap, this new economy issuers accounts about 80% of our main board total market cap. And in terms of secondary market performance, they account of 24% of our main board ADT, which is very encouraging. And also among them, 26 are actually pre-revenue, pre-profit, this including the pre-revenue biotech companies, as well as the pre-profit new economy issuers. So in terms of valuation, we also listed 5 sectors, which are quite symbolic here. So we have like retail and consumer services, plus like bank, non-bank financials. Those have a very reasonable valuations here in Hong Kong. So why these issuers come to Hong Kong? What are they looking for? This is a brief conclusion or reasons, 10 top reasons why these companies choose to list in Hong Kong. So the first is Hong Kong is a real international market. As shown in the previous PPT, Hong Kong is a one-stop access to the international institutional investors as well as retail investors. And also because we are the most reliable market in Asia time zone, these companies choose to list in Hong Kong to access both the investors in mainland and also the investors globalized. And also for the primary market, we have a deep enough pool to absorb the jumbo IPOs, as I mentioned, like last year's Alibaba IPO and as well as Budweiser IPO, both attract a lot of attentions globalized. And also for the listing structure, we have very diverse and flexible listing structure here. and we cater to welcome WVR, which is a dual class share issuers, as well as issuers can do dual primary or secondary listing here in Hong Kong. And we also welcome pre-profit new account issuers and pre-revenue biotech companies. So these are very flexible for issuers to choose from. And also, since the listing regime rolling out, Hong Kong has become the home of new economy issuers. And we have seen that investors in Hong Kong has become more and more sophisticated with using very innovative and up-to-date valuation methods to measure these new economy issuers. And those issuers with solid fundamentals are highly recognized here. And also, I think for issuers, IPO is not the final stop. Issuers are also looking for very convenient post-IPO refinancing. Here in Hong Kong, we also have very flexible and various follow-on refinancing tools for issuers to raise money after their IPO in order to support their development continuously. I think another point for the shareholders is how friendly the market is for them in terms of secondary market trading. So we have very friendly lockup period requirement for controlling shareholders as well as financial shareholders. And for the buying and the selling of institutional investors, this is all very convenient. And another point is our very sophisticated equity derivative pools. I will elaborate a little bit more later. So besides the equity itself, in Hong Kong, you can also find like single stock options and futures, and also various ETF products that can be used for investors to hedge their risks and to pursue higher financial returns. Valuation is one point that I have mentioned before, that because we have welcomed many issuers from various sectors, so the investors here have a very good understanding of the innovative models currently. And also the connectivity is a very proud point to emphasize here, that we have full access to China investment, and also our unique position is a hub for international issuers to come here. So that is why so many issuers, including Chinese issuers and also international issuers, choose Hong Kong as their IPO venue. This is also, I have mentioned several points before, so just to emphasize on the access to campaigns and access to governance. So as you know, that Hong Kong is very proud of its legal structure, and we have very transparent and very effective system. So if a company chooses to list in Hong Kong, then they will enjoy a stable and mature financial environment, as well as the whole government system. And also, if you an issuer chooses to list in Hong Kong, then you put yourself in a global brand and a global awareness, so which is very helpful for the company's further business expansion globalized. Okay, so this is the page that I want to emphasize on the equity structure products. So actually in May this year, we have signed a 10-year licensing agreement with MSCI to license a suite of MSCI indexes in Asia and emerging markets for the launch of 33 futures and options contracts in Hong Kong. And this agreement expands the existing partnership between Hong Kong Exchange and MSCI. And also yesterday, we welcomed the launch of the first futures contracts as part of the new index licensing agreement with 10 MSCI index futures contracts, which are dominated in US dollars and track underlying equities in markets such as Australia, India, Indonesia, Japan, Malaysia, Taiwan, and Thailand. So this represents a major step forward in the expansion of Hong Kong Exchange's derivative product suite, and significantly adds to the breadth and depth of the Hong Kong market. Following the introduction of the first batch of the contracts in July, Hong Kong Exchange plans to launch the remaining contracts in the year, subject to regulation approval and market condition. So this is our long-term commitment in developing Asia markets. So later on, I think in the sharing process, in the sharing sectors, we can share more listing requirements and some findings and experience with you on the listing side. Thank you very much.
Thank you, Winnie. It's truly insightful. So that was an overview of the Hong Kong IPO market and what could benefit Indonesians, new economy, and the tech companies to list in Hong Kong. So he now is King Loon, head of Fintech of Invest Hong Kong. He's going to share about Hong Kong Fintech ecosystem and competitive advantages for setting up in Hong Kong from practical view. King, time is yours.
Great. Thank you very much, Yuan. It's a great pleasure to share this information with all of you online. Now, what can I say, right? Our colleague from HKEX, Winnie, has done a fabulous job to show you, I think, the enormous strength of Hong Kong as a funding hub. Now, but having said that, I think this is obviously an important bit, but not the only advantage offered by Hong Kong. Now, so I guess before I go further into details, I just want to quickly give you a snapshot about the fintech ecosystem in Hong Kong, so that you have a better feel about what's happening here. Now, first of all, the last year we have essentially through a survey identified over 600 fintech-related companies in Hong Kong. For a small city like Hong Kong, this is an enormous achievement in and of itself. Now, interestingly, as you can see in the number next to the 600 number, you see this percentage, 53%. So obviously, Hong Kong being an international financial center, a lot of times when people think about Hong Kong, it's not just the local market. It's about using Hong Kong as a base to expand internationally. So that's why for the fintech executives surveyed by us, actually 53% of them indicated that they would like to use Hong Kong to expand internationally. Now, not only that, if you look at the percentage underneath, you see another number, 51%. And that is the intention for the fintech companies using Hong Kong to expand into the GBA, the Greater Bay Area, which I will get into a bit more details shortly. No, but this is, again, another enormous growth opportunity. Now, the other number I just want to quickly highlight is on the right, 76%. So what that means is that 76% of the fintech companies in Hong Kong actually have a B2B strategy. So they are essentially selling their solutions to various financial services institutions. Now, the number on the bottom, 44%, and this is another very important number for us to reference to. Essentially, you can get a sense that actually almost half, right, 44% of the fintechs in Hong Kong, they survive and thrive beyond 3 years, which is a very good indication about whether or not the market has the breadth and depth to allow these companies to prosper. Now, and then the number on the far right is 67%, and that is from a survey by E&Y last year, and that is essentially the consumer adoption rates. So 67% is a pretty good number about the worldwide average, in which even as a B2C market, in which a lot of companies are using Hong Kong as a test and pilot market before they move out to bigger markets like Greater China and Indonesia and so on. So for consumer adoption is a very important parameter about whether or not the maturity of the market is mature enough for the companies to really push out the latest products and services. And last but not least, you can see that 37% of the fintech founders are actually from overseas, beyond just the local executives and professionals. Now, in the interest of time, I won't go into deep details, but essentially, when you look at so why Hong Kong is a next launchpad for you to move into, there are basically 6 very important reasons, from the richness of the financial services opportunities to the access to GBA and also ASEAN funding sources, the progressive regulatory regime, the talent base, and last but not least, the low tax environments. Now, I think this is a interesting page in which we're trying to summarize some of the high-level numbers to give you a sense about the breadth and depth of the market in Hong Kong. Now, particularly for the folks online that are running your own fintech, engaging in B2B business, obviously for you, you'll be interested to find out, I guess, how many potential enterprise clients there are in the Hong Kong market. So obviously, I think the market stats is interesting, all these like multi-trillion dollars of market size. But what I'd like to sort of get your attention to is, for example, on the right, under asset management, the number of firms engaging in assets and wealth management were over 700 last year. Banking, there are over 160 banks in Hong Kong. Digital payment, over 100 players. Insurance, over 160 insurance companies. SMEs, there are over 340,000 SMEs, and those engaging in import-exports are over 100,000. Now, why are these numbers important? And that's because these are essentially your enterprise clients, whether you are selling to the banks, the insurance companies, the asset managers, or even if you are doing, for example, SME lending, that the SMEs will be your target clients. So you see, for a city of the size of Hong Kong, over 7 million population, we have an enormously rich B2B environment for fintech companies. And obviously, even for some of the market stats, asset management, 7.6 trillion AUM, 24 trillion total assets. Now, what these numbers are referring to is really about the flow or liquidity. So, of course, if you're looking at purely B2C market, Indonesia is a great market, right? It's a large population. But you are working on the areas where you need more liquidity or trading volumes or transaction volume. Actually, the Hong Kong environment is also providing enormous opportunity in this area. Okay, so for the GBA, many of you might have come across articles. I won't go into a lot of details, but just to highlight the fact that the population-wise, we're talking about 17 million, GDP 1.6 trillion. So that is an enormous market in and of itself. Now, the one thing I want to highlight, again, in the interest of time, is that for those of you who are following the news about GBA, just recently, the Hong Kong government or the local regulator had a press release about Wealth Connect. So Wealth Connect is essentially the new direction and the related regulation and the peripheral supporting infrastructure that enable essentially the mainland Chinese citizens living in the mainland China, as you can see, cities like the Shenzhen, the Guangzhou, Dongguan, to essentially have access to financial products sold in Hong Kong, which is one of the richer, essentially market offering wealth management products. Now, so not only are we offering this kind of access, but also it's not even just wealth management. Also, the insurance is also opening up in the near future. So essentially, as the GBA are integrating more closely in the near future, there'll be more, I would say, cross-border opportunities for both B2C and B2B companies. ASEAN, as Mr. Law mentioned, Hong Kong has signed many free trade agreements with various ASEAN markets. So making Hong Kong a very viable hub for you to access to other ASEAN markets as well. Now, this is a page that I guess in the perhaps Q&A session, I will perhaps drill in a bit deeper. So again, this is just to give you a sense that because Hong Kong government is highly supportive of the fintech space, so that when you map out all the various support schemes from top to bottom, from registering the company in the sort of the beginning of a journey when you enter the Hong Kong market to R&D. So obviously, when you have to localize your product, you need to have certain funding and activities to do developments. Hiring, of course, you have to get access to talents in the AI, the big data, the blockchain of the world. Now, business development, there's also some funding schemes that essentially help subsidize the corporates to adopt new fintech solutions, as an example. Fundraising, another important piece that Hong Kong government also match the funding led by some private VC. Last but not least, again, we are also having funding to help the fintechs in Hong Kong to expand overseas. So again, happy to drill down in more detail, perhaps in the Q&A session as well. Now, I won't go into a lot of details as Winnie has talked quite a lot. So on the right-hand side of this slide about the IPO fundraising, which is enormous. Now, on the left-hand side, which I'd like to point to your attention, is that over the past 6 years, actually from the year 2014 to 2019, actually in the private VC sector, actually we have raised over 1.5 billion US dollar of private capital. So it's a pre-IPO kind of investment, making Hong Kong a very vibrant environment to get early stage investment as well. Now, this BC chart is intended to give you a sense about how progressive our regulators are. So the HKMA, the Hong Kong Monetary Authority, which is the de facto central bank in Hong Kong, as well as the regulator for the banking sector. Now, our colleagues there have been working tirelessly now since 2016 in pushing the whole fintech developments. So all the boxes that you see on this slide, essentially each box refers to one, I would say, transformative, revolutionary project, essentially to help open up the fintech market in Hong Kong, to put in some vigor around regulation, at the same time providing guidelines for the various players to make financial services more convenient for consumers and also for SMEs and so on. Now, this is another perspective about the talents. Naturally, as a financial services center, we have lots of talents in the accounting, the audit, the asset management, the banking, insurance, legal. I mean, just the sheer numbers of professionals are just mind-boggling. So from a talent standpoint, we're very rich base on the fin side of the equation. Now, at the same time, from not only the fin side, but also the tech side, as you can see, this is a summary. If you can look at the table on the right, you can see that there are a number of essentially logos of the various universities and large corporates like Tencent, various government entities, like the Cyberport, Science Park, HKMA, S3. So they are all working either on their own or together to offer different training courses, education, curriculums, or even online programs, essentially to ensure that we have a strong supply of talent on both the fin side, on finance, as well as the tech side, on IT. So in terms of quality of talents, as you can see, based on the world rankings by the QS World University Ranking Survey, that the Hong Kong universities rank #3 in the whole world for the whole computer science and IT space, and then #4 for accounting and finance. So that basically speaks highly about the quality of talents produced by the Hong Kong education institutions. Now, last but not least, if you ask me, well, so what is the advantages for setting up in Hong Kong? Now, this is something that many of you may know, but after all, this is also quite important. So the tax base, as you can see, compared with some of our regional peers, actually the tax rate is just hands down very competitive, making it very attractive as a place to do business. As you can see on the left, you see this number, 8.25%. So for the first 2 million of profits, essentially the tax rate is even lower at 8.25%. Again, happy to talk in more detail in case you're interested to drill down a bit deeper. So I guess just a few quick points about how we, Invest Hong Kong, are here to help in case you're interested to explore the Hong Kong market. Now, so this is a map where we're trying to map out some of the key partners within the Hong Kong ecosystem related to fintech. Now, starting from left to right, so there's the Fintech Association of Hong Kong, the W Hub, the Cyberport, the Science Park, S3, HKPC, the regulators, HKEX, essentially from accessing to the market to accessing talents, accessing funding, the incubation of the space, the regulation, capital, so you name it. There are different players where you don't have to knock on the doors with each of them. You just have to come to Invest Hong Kong and connect you with the right parties. Now, if you really want to experience what this is like by talking to the different stakeholders, potential clients, I would highly encourage you to participate at the Hong Kong FinTech Week. So we have both the physical and the virtual component. So if traveling is still an issue in November 2nd through the 6th, you are definitely welcome to join us virtually. We get a virtual fair, the competition, the deal floor, the whole 9 yards. You can expect from one of the most prominent fintech events in the world. So last but not least, I just want to quote from the chairman of Fintech Association, Hemant Sanian, in his words, the FinTech Week is literally like a Super Bowl of fintech. Why? Because as a fintech dedicated, fintech only conference, we had 12,000 attendees in last year alone. So this speaks to about the breadth of the ecosystem, because obviously a lot of these people are business executives who are potential clients of yours. So with that, I want to end this slide with this slide that essentially we look at fintech. These are the 10 segments that we are looking at, that we have some colleagues who focus in different areas to offer you the support that you need. So with that, I guess I would hand it off to Kin-wai again. Thank you very much.
Thank you. Thank you, King. Thank you for sharing on Hong Kong's fintech ecosystem and how Hong Kong will be ideal place for ASEAN and Indonesian tech companies to expand the business. So we're gonna move to the next sessions. It's gonna be a panel discussions. I'm very pleased to have the 4 distinguished panelists at this afternoon. We're gonna talk about the latest development trends of the technologies ecosystem in Indonesia, especially in the financial technology sectors. And we're gonna share about how we provide an update on the capital market and listing landscape in Hong Kong, and how Hong Kong would be the ideal place or platform for raising capital and the bridge for Indonesian tech companies of the expansion plan. So we're gonna have 30 minutes on these sessions, followed by Q&A at the final sessions. And I might remind to the audience that you could submit your questions via the chat rooms. So let's move to our panelists. So we have the first panelist as Winnie Han from Hong Kong Exchange and Clearing Limited. And second panelist is King Loong from Invest Hong Kong. And the third panelist is Pa Diki Wijaya, is the Chief Investment Officer at Investries. He has long experience in information technologies companies, and now he's joining Investries and helping Indonesians and build up the P2P platform for helping the SMEs. And the last but not least is Hannah Cassidy, as the sister partner of Hong Kong, co-chair of Global Bank Sector Group at the Herbert Smith Freehills. So Herbert Smith Freehills is multinational law firms headquartered in London. So Hannah is described as the key name in contentious regulatory work and was recently ranked as the next generation's of partner. And Hannah advised fintech clients and financial institutions on regulatory policies, operations, and investigations. So I would like, first of all, I would like to congratulate Hong Kong Exchange and Clearing Limited for sitting on the top spot for 7 times in the past 11 years globally in terms of the IPO numbers and IPO fundraise. And I guess in 2019 itself, 49%, almost 50% or 49% of the IPOs fundraise came from new economies issuers, and roughly about 12% are coming from biotech and healthcare sectors. So I believe it was a result of the new listing rules, which attract more and more tech companies, innovative companies to Hong Kong, especially in the biotech sectors. So I would like to ask Winnie, so how will these new rules be applicable to the other tech companies, let's say Fintech or other sectors? And how is the new rules will be relaxing for the tech companies?
Okay, thank you, Helen. Thanks for the question. As I mentioned in the presentation, in April 2018, we have launched a new listing rules regime to welcome the new listing, the listing of new economies and innovative companies in Hong Kong, which included 3 new chapters, namely the biotech companies, pre-revenue ones, and the weighted voting right structure ones, dual class share structure companies, as well as secondary listing of qualified issuers listed overseas. So as I mentioned in the PPT, on the biotech front, although there's only 2 years, but we have already become the 2nd largest biotech fundraising center worldwide. So on the new technology side, regarding the rules, we have formed a very successful technology and a new economy sector in Hong Kong with Chinese tech giants. For example, Tencent, Alibaba, Xiaomi, Meituan, JD, and NetEase. They have already listed in Hong Kong with overwhelming investor interest. With the increasing capital market focus on the tech startups, we are expecting more and more tech innovators to come to Hong Kong to list soon. And for the first 6 months in 2020, during the COVID-19 outbreak, Hong Kong capital market demonstrates a strong resilience. So we have up to now 59 IPOs listed in Hong Kong Exchange and with fund of over $11 billion US, including 4 pre-revenue biotech companies listed during March to May, and also the secondary listing of NetEase and JD. So together, the 2 reached more than US $7 billion. And following the successful return of Alibaba last year. So for the tech companies front, actually, the general listing rule is universal for all the applicants. And I can show it here now to share this PPT once more. So this is, if it's general tech company, then it can follow our general listing rules here. Yeah. Here is the, I hope everybody can see this. So we have like 3 different financial requirements. So the issuers can fit in either one of them on the left side. And so this can cater to different issuers with different features, no matter it's profit or not, or they have different market cap or revenue or cash flow features. And also for the universal requirements, which is on the control and management and public flow and professional advisor side. So this requirement are the same for all the issuers. And we also just want to like highlight the chapters and chapter on the WVR, VT voting rights. So this chapter is in addition to the current main board listing requirements. That this one is provide another route for companies with innovative definition, that they can fit the innovation definition either in the business model or in the technology side. We have a little bit higher requirements for this kind of company, which we require at least Hong Kong dollar 40 billion at the time of listing of market cap, or at least at least a 10 billion Hong Kong dollar market cap, with revenue of Hong Kong 1 billion for the last audited financial year, in order to maintain a balance of founding team and general shareholders. For tech companies, we understand they have various features that are different from the traditional ones. We have also published guidance letters on tech companies' share option scheme. And also we have guidance letters on like heavy reliance on stakeholders and connected transactions. So these guidance letters are much in line with the current features of how new technology companies operates, and we are trying to bring up our regulation side up to the current situation. So in all, we're trying our best to help qualified new economy issuers, including fintech ones, to come list in Hong Kong. Thank you.
Thank you, Winnie. So I believe with the new listing rules that, with the relaxation as well, so we'll bring more tech companies, hopefully in the future, especially for the ASEAN regions, to list in Hong Kong. So I was also quoting on the Google and Temasek report on the Southeast Asia's digital economies. The title is The Economy Southeast Asia 2019. So Indonesia is predicted to be to reach the 130 billion by 2025. Now it's already 40 billion in 2019. So it's really dwarf the regional peers, and the growth in average every year is at 49%. So you could see that how Indonesia is a huge market, and hopefully in the future, the prediction as well as with the growing numbers of the fintech companies and other sectors as well, will have more influence in Indonesian digital economies. So why should Indonesian tech companies list in Hong Kong, and what are the major pull factors for Indonesian tech companies to list in Hong Kong?
Thank you, Helen. That's a very good question. I think, as I mentioned, Hong Kong has over 2 trillion Hong Kong dollar, which is about 250 billion US dollars total of IPO fund raised by issuers over the past 8 years. And we are the #1 IPO fundraising center for the 7 years of the past 11 years. And currently we have over 400 listed companies, including international and mainland China firms. So I think for a market like this, it is a market any issuer should not miss when they consider IPO. And Hong Kong has a unique profile with both Chinese and international DNA. From a market point of view, we want to continue to communicate that our market is robust and resilient against the backdrop of a very difficult micro environment in 2019, and also very difficult situation recently with COVID-19 outbreak. Our competitive advantage comes down to 3 key points, which is accessibility, sustainability, and credibility. So in terms of accessibility, we mean access to global capital markets and global investors, as well as the world's largest customer base, given our close proximity to China, as well as other large Asian markets. The other forms of accessibility we have is the world's top business institutions and corporations. So on sustainability, Hong Kong has been the world's #1 IPO market for 7 times in the past 11 years, and 2 of which were 2018 and 2019. So our capital market has witnessed both ups and downs in the past decade, with a very strong record of IPO fundraising capability. Coupled with that, we are a very robust secondary market. So credibility is our 3rd key competitive advantage. So we have a legal regime, listing platform, financial center, banking and auditing infrastructure, and business center that conform to the highest international standards and qualities in terms of transparency. So I think in the past 2 years, Hong Kong market has not only enabled multiple international mega fundraising, but also facilitated a major shift to accommodate a lot of IPOs for issuers from new economy sectors, including TMT, which accounted for almost half of the new IPO fundraised for the last 2 years. So this signifies rapid changes towards economy supported by technology advances and innovations. So in all, for international company, any company with an international expansion dream or goal, I think an international exchange like Hong Kong Exchange can help Indonesia issuers to go global by providing issuers with access to the international capital and investors at a market-driven price. So investors, meanwhile, will also have being able to protect their investment from currency risks. So that's why for Indonesia tech companies, Hong Kong market is relevant in particular. Thank you.
Thank you, Anna. So actually, I personally have met with several Indonesian tech companies, and they initially to plan to list in the local stock exchange as well as the overseas stock exchange. And could you elaborate more on what are the advantages for those companies in terms of the expansion and business fundraising goals when they are listed?
Okay, yeah, actually, this is a very good point because we also received many interests and inquiries from the Indonesia tech communities and financial communities about listing in Hong Kong. As more Indonesian corporations are expanding their business and hiring for the whole Southeast Asia market. So close enough, but yet a truly international market would be a huge facilitator in terms of both branding and business development for the company. So in light of this, we are doing our best to roll out measures to facilitate international background issuers, including Indonesia issuers, to raise funding in Hong Kong. And we are very happy to talk about specific questions from these potential issuers. And I think in terms of like the fundraising goal and business expansion, in terms of business expansion, listing can enhance a company's corporate governance and clear up the development strategy. So this could bridge the company with international investors and strategic investors to strengthen the business operation and upgrade them to the international standard. And also in terms of fundraising, listing can provide a very direct and flexible, efficient channel for the company to raise money, not only through primary markets, but also in secondary market in the long term, which bears lower borrowing costs than debt financing. And although Hong Kong Exchange is the world #1 IPO fundraising market, but actually most of the years we have even higher refinancing size compared with IPO. So I think many issuers find it very flexible and easy to do follow-ons in Hong Kong market. And we also have a variety of refinancing tools, including like bond offering, convertible bonds, rights offering, private placements, etc., and which can be done through a general mandate, which is very convenient. Whenever the company needs money, they can just raise money fair enough and very quickly, like overnight in Hong Kong, which is all possible. So I think that's particularly important for the company, especially during this pandemic situation, because companies need to stay cautious about market dynamics and to overcome the uncertainties on funding with the considerations of the funding source, cost, and alternative funding options. With the access to reliable public markets, so it provides issuers with a more predictable way to obtain continued funding support, whereas investors would also have flexible options to exit or change their asset allocation. I think the last point is the interest and involvement from the various Chinese investors are investing in Indonesia. This Indonesia story could be better appreciated in Hong Kong capital market, benchmarking similar listing cases from China and other countries. And also with the Chinese investors like endorsement, I think this Indonesia tech companies can be more appreciated and recognized in the Hong Kong capital market, which will benefit in terms of their further development in business and also refinancing the capital fund. Yes, thank you.
Thank you. Thank you, Hannah. So I'll go to Hannah. So I would like to have from your legal perspective. So what are the legal compliance that the fintech companies or other tech companies they should be aware of when they are going to list in Hong Kong? Because I believe this is very important for any overseas companies, especially from the ASEAN regions, in Indonesia, especially with different judicial system. I guess they need more key messages, the strong messages from the regulators as well as from the legal perspective as well as what they should be concerned or they be aware of.
Brilliant, thanks very much. I wanted to highlight 3 key points. The first is, I think, like if you're looking to expand into Hong Kong, then you need to be thinking about the regulatory regime. Hong Kong has a really mature, really progressive regulatory regime, and it's really attractive to fintech companies. The key regulators there are the Hong Kong Monetary Authority and the Securities and Futures Commission. And they've introduced over the past 4 or 5 years a number of initiatives to attract fintech companies. So it is really attractive. But you do need to understand whether what you're proposing to do, so whether your business model, the activity you're intending to carry out needs a license. Just because you don't need a license in Indonesia or in other jurisdictions in Asia doesn't necessarily mean you don't need one in Hong Kong. So you need to be thinking about what your business activity is, do you need a license, and who the key regulator would be. So regulatory due diligence is really, really key. The second point is fintech offers huge opportunities, but also creates new challenges. It's really important that you have robust controls and procedures in place to mitigate things like technology risk management, concerns around data, employment, and also consumer protection. So it's often something that catches out fintech companies who are expanding really, really quickly. Often their policies and procedures and controls don't quite keep pace with the progress and the growth of the company. So we work a lot with fintech companies to develop those policies and procedures. And some of the things that you should be thinking about are, do you have a policy to handle your personal data, the personal data of your consumers? If you do have a policy, does that policy match the Hong Kong regulatory expectations? And if not, do you need to create some kind of annex that reflects the Hong Kong regime? Do you also have a policy in terms of how you would deal with regulatory inquiries? If you are entering into a more regulated market, then you need to bear in mind, depending on your business model, that you might be subject to inquiries, to information requests from regulators, from law enforcement agencies. Do you have a policy to deal with those? And if not, then you need to think about putting one in place. The third point is, as your business is expanding, if you're thinking about expanding into Hong Kong and listing in Hong Kong, just keep under review whether any offshore jurisdiction will apply. I'm thinking in particular the legislation in Europe. One piece of legislation which often bites in Asia is the European General Data Protection Regulation. And that bites if you are processing personal data of European customers or European investors. So if GDPR does apply, then you need to make sure that your policies and procedures comply with GDPR and make sure that your contracts have in place the relevant T's and C's. That's it from me. Thank you.
Thank you. Thank you, Hannah. And I would like to raise question to Pa Niki and also Kin. So how's the impact of the current pandemic situations to the fintech companies in Indonesia and in Hong Kong as well? So will there be any impacts to the current business models?
Hi, Tilman. That's a very valid questions. I think in lieu of the COVID-19, AFTECH, we actually did a member survey, and almost all subsectors are affected, negatively affected by the outbreak itself. But again, with every challenge, there's always an opportunity that lies somewhere in there. In this case, that it forces, in terms of the people itself, we are now entering a kind of a new normal where low touch economy is gaining momentum. And in terms of company, if you can innovate and tailor your service to match the new normal, you can actually grow in this kind of situation. So, everyone can say that with COVID-19, it's very hard to grow. So, and, bad companies will probably struggle to survive. And we know that there are a lot of our members that are struggling to survive. They're literally in survival mode, living from, month to month. And some of them have actually already laid off some of their staff just because, there's a decrease in their demand for their service. And there's no new business coming in. But if you can manage to innovate and kind of align yourself with the current situation, there's always room to grow. So for instance, right now, like digital signature, eKYC companies, they're actually growing. Why? Because now suddenly, previously the government had already said that, we need digital signature, we need eKYC, and fintech, as the forefront of technology, technologically in financial industry, we are already implementing that. But with the current situation, other companies are also forced in a way to implement all this technology that we've been using. So we are seeing, our fellow company members in Fintech Association that they're growing. eKYC is growing, digital signature is growing, robo-advisor, surprisingly, is also growing. And yeah, there's always, so I guess my message is there's always room to grow, despite the fact that, the challenge is quite significant and everywhere.
Okay, your response?
Well, again, I agree with Dicky that definitely there's a silver lining to the pandemic situation. Now, when we look at just some of the observations that people have been making about the sort of barrier for adoption of fintech, typically the one area that people point to is the reluctance of people who are already used to the very convenient, financial services environments in Hong Kong. Because after all, Hong Kong is a very mature financial services market. They're just so convenient to even walk to a bank to get your banking service. Now, but then I think something changed. Now, when we look at some of the numbers shared with us, by the major players from the HSBC to the bank, or from the newer player like the WeLab of the world, actually, when we look at the numbers that they publish, essentially it's just mind-boggling that you're talking about anywhere from like 40% to over 100% growth in terms of the adoption of customers online. So the pure online onboarding of new customers. So they're literally in that segment growing leaps and bounds. And why is it important? And that's because as the Hong Kong regulators gave out the licenses for virtual banks, which HMA gave out 8 licenses to virtual banks last year, and they are going to be fully operational this year, maybe early part of next year. So actually, I mean, somehow the timing just worked, that all the virtual banks come on the scene, and that momentum also, in a way, motivate the incumbent banks to even speed up their own investment and digital transformation. And then you have pandemic. So I think that even further accelerate the whole adoption of digitalization. So in a way, we are seeing this very positive trend that people really speeding up in the launching of products that have lower fees, more varieties, simpler usage and user experience that's fantastic on an app, just a few taps away from getting something done. So all in all, if we didn't have the pandemic, this might have taken another, I don't know, who knows, right? A year, 2 years more for this to go full blown.
Right. So could you explain a brief? So how's the of course we know that Hong Kong has a vibrant fintech and startup companies which operates globally. And could you please explain in brief why Hong Kong would be an ideal place for Indonesian tech companies to plan their business expansions?
Well, I guess I just reiterate a few quick points that either like Winnie or myself mentioned in the previous sharing. Now, so it really comes down to the audience. Now, if we are talking about a B2B Indonesian fintech company, for example, then as I just mentioned, there's just so many banks, so many insurance companies now in Hong Kong. It's just a small little place. You can probably meet like 5 different clients in a single day. So I think that richness of enterprise environment is just unparalleled. So that is a very good starting point for any company in fintech looking at the B2B opportunities. Now for B2C, obviously Indonesia is a huge market in its own rights, but then we have GBA in this side of the world. And at the same time, obviously as you grow, you obviously need capital. And this is where the private VCs and also the HKEX come into play. And that's just one number to put in perspective. Of course, I think we need to share some amazing numbers from an IPO perspective. Now, I had a conversation with the general manager of the Hong Kong VC Association last year. It's a very nice lady called Joanne. So I had this conversation with Joanne. I was like, wow, I mean, Hong Kong, I didn't know that before the conversation, that the Hong Kong VCP Association is the so-called oldest association of its kind in Asia. And all the members together, they're managing over $2 trillion of private capital in both the VC and the later stage PEs. So there's just a lot of money here, and a lot of these VC and PEs, they live in Hong Kong. So that's why I think the funding side is just a lot of scope here for folks that needs the capital for fundraising. Now, I think the last but not least, I think the Hong Kong governments also have been putting forward a lot of schemes, various schemes from the enterprise support schemes for R&D, or the tech voucher program for business development. So we basically did some simple math. So for somebody, a fintech company, for example, come into Hong Kong, assuming that they meet all the requirements and they apply for all the applicable schemes, they can get 20 million Hong Kong dollars of various government subsidies. So that works out to be somewhere around, I would say about 2.5 million US of government subsidies. So this is another good boost for new fintech coming into Hong Kong.
Thank you, King. So I want to raise last question to Nikki. So, but could you explain a bit in a brief on how's the Indonesian fintech landscape and what are the key strengths of Indonesian fintech companies?
Yeah, I think we know for a fact that fintech is actually one of the fastest growing sector in Indonesia. It's probably, if not the top 2 funded sectors along with e-commerce. And there's a study that was done back in May 2018 that even in 2017, the fintech investment has reached about the level of about 170 plus million US dollars. So that's a lot of money for a growing industry. And if you see with AFTECH, we also have seen a huge growth, especially in the last 2 years in terms of our memberships. Granted, the biggest growth has always been in the peer-to-peer lending, which is where Investor is. So it's 43% of our members comes from peer-to-peer, and then payment, which used to be the largest sector in AFTECH, now is the second biggest at 18%. But the best part is that ever since the Financial Service Association started the financial inclusion, digital inclusion arm, we've seen a growth in new companies such as wealth management, equity crowdfunding, enabler, insurtech, regtech, and all others. So I think because Indonesia as a country itself, we are very large, right? We have a saying in Indonesia, dari Sabang sampai Merauke, and if you see in a map, it's actually as wide as US, right? Indonesia, and we have more than 13,000 islands. So our people are spread out. Financial inclusion is very low. So we know that there's a challenge, and I think the strength point of Indonesian fintech companies that despite all these challenges, we've managed to innovate and find ways to serve these underserved people. Not just like, for instance, payment. We know in Indonesia, we don't have that many credit cards. So the payment companies such as Gojek with their GoPay, OVO, they are now serving majority of Indonesian who probably don't even have not just credit cards, but they don't even have bank accounts, but they have GoPay account. So we've been, in a way, the startups, the fintech startup in Indonesia, we've been kind of forced to innovate and kind of go around all the challenges that the population of Indonesia face, the situation in Indonesia as well. And then we've been very lucky that the government has been very helpful in terms of regulation. We know government, it will never match kind of the innovation speed of startup, but they've been quite working with us hand in hand. So the regulation comes a bit later, but I think it's quite protective, both for the consumers as well as the fintech startup.
All right. Thank you, Pa Diki. So
Thank you.
Thanks for the deep insight from all panelists. So we have the time limited. So we are going to move to the Q&A, but due to the limited time, so we're gonna have only 2 or 3 questions. So I would like to just questions from Edward Sukenda. So I believe the questions designated to Kings. So the question is, what's the percentage of those fintech companies are locally bred or inbred from existing financial companies? And how are the fintech local bred being supported in Hong Kong?
Well, this is a good question. First of all, we don't do the stats in this way, but then I think what we can share with Edward and all the audience is that again, it's a very interesting environment, because now just to go back to the sort of DNA in the background of Hong Kong as a market. So there's just a lot of financial institutions in Hong Kong. So naturally, some of the I think the bankers, the insurance executives, they might want to do something new. So naturally, I think in sort of the banks, the insurance companies, sort of incubating their own companies, which they are. But then actually we're seeing even more fintechs. They actually I think the products of the executives from these large financial institutions that basically came out and they got a few like tech smart guys together, and they start their own fintech. In regtech, in fact, I personally know a few very senior executives from major banks that started their own regtech companies in Hong Kong. And then that's because, as you can imagine, that the advantage of really understanding how the banks worked internally, the approval process, even the selling process, right? By knowing the people inside the bank can be really helpful. So that's why we are seeing actually quite a lot of folks from these backgrounds to start their own in Hong Kong, and they've been doing reasonably well. Now, the other big group of fintech companies that we see in Hong Kong are actually from overseas. So literally from all around the world. The largest economy that basically have fintechs coming to Hong Kong is actually mainland China. Because I think for those of you who may not be following this closely, a lot of mainland fintechs are really trying to follow the footsteps of the Alibaba, the Tencent of the world, in using Hong Kong as the international headquarters, so that they use Hong Kong and then springboard to, say, Indonesia, to Japan, Singapore, and so on. So at least this is like the #1 economy. The second, followed by the US, the UK, the Australia, the Singapore of the world. So we're seeing quite a lot of fintech companies from these economies coming into Hong Kong, using Hong Kong as a base to subsequently go into, say, GBA or the ASEAN and Europe and so on. So this is like a second really big group. Now, of course, there are some local, fintechs, but I think unlike other sectors in startups, fintech, because it's highly regulated, relatively speaking, you tend to see more people from the banking sector or the insurance sector who've been in this, in the field for some time to start around. So as a result, it's a relatively more specialized field. So that's why I think even for the local homegrowns, you don't tend to see some like 18-year-olds like starting a fintech. It's relatively, it's there. It's just that it's not as common compared to with other sectors.
Thank you, King. So we have another questions. So the second questions. So what from Rezalina Aida? What are the challenges in near-term investment outlook in Hong Kong? So I guess Kay could explain a brief, and Winnie could add it, and as well as the Mr. General LAW, if you would like to add something on that.
Well, I just have a quick comments. Now, first of all, definitely, no doubt it's challenging. But just want to highlight 2 key points. First, actually, when you follow the news, there are actually quite a number of high-profile press releases, in the middle of the pandemic, back in April, like March, April, May. So, for example, there's a company called Air Wallace. It's Australian fintech that moved the headquarters to Hong Kong, and they raised a Series D of $160 million in April. Okay, so there's another example. Is a company called HKEX Securities. It's a wealth tech company started in Hong Kong several years ago by several international leaders, and so they basically sold the company to a unicorn called SoFi from the US. And that transaction also took place in the middle of the pandemic. Okay, I mean, there's just numerous examples like this, where I think the companies that have traction, and particularly fintech by definition, has a lot of digital component. So the physical side may not be I guess, as impactful. So therefore, actually, we do see quite a lot of transactions that took place during the pandemic. Now, of course, when we talk to the VCs, so the second point was, based on the feedback we got from the VCs, the angels, the family offices, and so on, definitely they're getting more cautious. They want to make sure that they are putting the money into companies that already have traction, they have a product that's relatively proven, they have some clients, be it B2B or B2C, and also they can see that the fintechs are managing the cash flow very cautiously, they got a good team and so on. So definitely they're being more cautious, but the money and investment are still being made. So there, I mean, there's another company called Betatron. They're launching the cohorts, I think in August. So each company that they're investing in, they're investing $500,000 US. So it's happening. So the cohort will start next month. So I mean, the money is still here. Investors are just more cautious.
Any response from the panelists? Mr. Law, do you have any feedback on that?
Right. Yeah. Thank you very much, Hyun. I would just like to add maybe a point or two to what King has just said. So, I mean, from the overall perspective, I think uncertainty is definitely one of the challenges that many businesses or people in Hong Kong and in some other economies dealing with, and especially for Hong Kong, because being a very open economy. So what's happening around us and beyond us in the greater arena of multilateral trade and economic integration or dealings. So we would have to pay particular attention to changes to the overall business environment. And I think at the same time, because we are still pretty much in the process of grappling with the post-pandemic new normal. So there are definitely some uncertainties associated with that. So well, we always say that, yes, right, there could be some challenges, but at the same time, there could also be some opportunities. So it's all about how the regulators or the government and also the business sectors or the community better equip themselves in terms of business strategy, in terms of regulatory regime to provide a more conducive environment for all the key players to thrive and to explore the potentials which could or which would be made available after all the challenges have abated or subsided. So I think this is a general take on the challenges that we may be seeing in Hong Kong and in some other economies in the next few months or a year. And specifically about Hong Kong, I think I would just also take this opportunity to address the next question about the current situation in Hong Kong. So I think this takes us back to my welcome remarks about the national security law and the efforts of the Hong Kong government and the central government to bring back stability and certainty to Hong Kong. With the national security law, we are quite sure that it will be one of the effective means and tools to help us to see us into a more peaceful time of Hong Kong. Because with a peaceful and stable environment, only with that we will be able to further develop our economic endeavor, pursue our economic endeavor, and I think it will also provide a very good and I would say beneficial environments for businesses and investors, both locally and from overseas. So over the past, I would say over the past week, so it's in a sense quite encouraging that we are seeing some decreasing signs of social unrest in Hong Kong, and it's also one of the major principles upheld by the Hong Kong government and the central government to make sure that the high degree of autonomy currently enjoyed by Hong Kong will not be affected and will be maintained. So, and one country, two systems, and rule of law, judicial independence, and all the freedoms and rights that we have been enjoying in Hong Kong, they are all the fundamentals buttressing the success and further development of Hong Kong. So we will hold those really to our hearts and make sure that we will continue to have a very good environment for business and investment. Thank you.
Thank you. Thank you.
Hyun, I just want to add
please.
Points to Mr. Law's comments. Now, I would just like to share the observation that our team has on the ground, because we meet with fintech companies every day. So there's just a lot of very sort of tangible comments, helpful to shed some lights. Now, our people concerned. Yes, some of them are a bit concerned about what they've seen on TV. But then at the end of the day, I mean, again, fintech, much like other major emerging sectors, I mean, people are really placing the business over the other factors. So that definitely when folks would do due diligence, they'll look at, I mean, what is the business opportunity. Now, in the end, particularly if you look at the recent reports given out by IMF, for example, there have been some forecasts about the GDP growth percentage of the various major G7 countries and the other major economies. If you look at that list, just published by IMF literally less than a month ago. So we look at that list. Now, China is the only country, only economy on that list that has a positive growth rates for the year 2020. All the other economies are there behind the curve. As a result, they are all negative in terms of GDP numbers. So if I were the business leader of a fintech and I need to grow and to sustain a business, where do I go? I go to somewhere where there's real business to be made. So I think China is 1%. Now, for Q3, to be more specific, the growth numbers, to my recollection, for China is 3%, plus 3%. For Hong Kong, is plus 1.7%. So again, Hong Kong has really done a fantastic job and really bounced back to show resilience. So there's money to be made. So what does that mean? So what that means is that for fintech companies from all around the world, they see this opportunity. They want to get in, but at the same time, they want to be cautious. So that's why they'll come in with a smaller team, maybe 1, 2, 3, a few to 5 people. They got some co-working spaces to minimize the costs. They will, and typically they already have some potential clients already in mind. So then they do BD. They get some government subsidies to pay for some of the localization of the solutions. So they are very cautious. But at the same time, they don't want to lose this opportunity because this is like a lone bright spot in some ways, given what's happening around the world.
Thank you, King, for supplementing the informations. So I'll make sure that all questions will be responded, and because you do limited time, so we're gonna end these sessions or the Q&A sessions. And I would like to say thank you for the insight from the panelists, and I believe that it would be strongly beneficial for Indonesian tech societies, especially for the audience. And I would like to summarize 3 key important takeaways on our earlier discussions. And first, for many companies, overseas companies, ASEAN, Indonesia, so reaching the diversified investors base is one of the key factors affecting listing decisions, especially in Hong Kong, and how you could see the China is a greater market for Indonesia. And the second, that the startup ecosystem in Hong Kong has been flourishing in the recent years, and innovation and technologies are very important growth engine for future economic development in Hong Kong. So there are so much opportunities for overseas fintechs from ASEAN and Indonesia especially to grow in Hong Kong. And the last but not least is the fintech Indonesia will continue as the front of the Indonesian startup scene, and it's more diverse fintech startup. We have higher growing numbers in Indonesia as well, and we'll see more progress to expand globally. So I believe Investor is one of the leading fintech companies who has expanded across the Southeast Asia regions. And there's a need for such platform to support Indonesian fintech companies to expand further. So thank you for panelists and the audience for attending these sessions. So I hope we'll see each other again. And I just want to make sure that all the questions will be responded. And we have all the panelists will have the information that if you have any questions, queries, very important questions, so we will share all the panelists' informations on the details. Thank you. So I offer to Maisa.
Thank you, Ms. Winnie Han, Mr. King Lung, Mr. Diki Wijaya, Ms. Han Cassidy, and Mr. Hewan Rahmanda for a delightful discussion about the latest development trend of technology ecosystem in Indonesia, especially on financial technology sector, and updates on the capital market and listing landscape for new economy and innovative companies in Hong Kong, as well as the competitive advantages and attributes that Hong Kong has in the greater Asia and Asia Pacific. Before closing the webinar, I would like to thank our speakers and panelists here today, especially Mr. Kin-wai LAW, the Hong Kong Economic and Trade Office, Invest Hong Kong, and Hong Kong Exchanges and Clearing Limited. Don't worry if you missed our webinar today. You can watch a replay of the session on our AFTECH YouTube channel. And finally, thank you so much for everyone for joining the call. Good afternoon, and I'll see you again on our next webinar. Assalamualaikum warahmatullahi wabarakatuh.
Thank you. Thank you, everyone.
Thank you, everyone.
Thank you. Bye-bye.
Goodbye.
Thank you. Bye-bye.